Hi, ma'am.
Namaskar.
Namaskar. Welcome to Fintech Summit of IIT Bombay. I'll quickly introduce you and then I'll hand over the keynote speech to you, ma'am. Hi, everyone. It's my great pleasure to introduce our Finance Minister, Ms. Nirmala Sitharaman. Ms. Nirmala Sitharaman is member of Rajya Sabha, and she's earlier served Defense Minister of India. She's only the second woman after Mrs. Indira Gandhi, who was also a Defense Minister and Finance Minister. Ms. Nirmala Sitharaman was born in Madurai, Tamil Nadu, and she completed her Master of Arts in Economics and MPhil from JNU, Delhi. With that, ma'am, I'll hand over the keynote speech to you. Request you take it forward.
Thank you, Devendra Agarwalji, who's the summit chairperson, I think. Am I audible?
Yes, ma'am, you're audible.
Okay. For giving this opportunity to me to participate in IIT Bombay event. This event is focusing on the next fintech destination, India being seen as the next fintech destination. So I'm glad to be here talking about this, particularly at a time and in that year where in the immediate past 2 years, we've seen great fintech adoption by Indian citizens. It is that adoption which has made us feel that India is really reaching a crescendo in terms of fintech revolution, which across the board in the country, irrespective of the area or irrespective of the levels of financial literacy, let us say, people have adapted very quickly. Whilst the global average is about 64% of fintech adoption, India's adoption rate is at about 87%. And as a result, you can see the adoption rate being at this scale and at this level is also probably triggered by the pandemic itself. Because of the restrictions on the economy, restrictions on the movement of people wanted to somehow facilitate themselves. And in this, in a way, credit goes to the Jan Dhan Yojana, through which 2014 onwards, people have been brought to have a financial inclusion process whereby they were given access to banking services, they opened an account, and to strengthen that, Government of India also made sure that the entitlements that they have can be directly credited to their accounts through DBT. So when DBT happened and the poorest of the poor also had some periodic amounts being credited to their account, they saw the benefit of being a part of the financial setup, and that itself made them realize that when they are in a formal financial setup, receiving in real time their entitlements without any pilferage or without any middlemen in the process, the temptation to be part of an effective Jan Dhan Yojana was seen, and people have used the temptation to get on board these digital platforms. The Prime Minister once very clearly said that I want to convert a challenge into an opportunity, especially in the context of the pandemic. As a result, now we find citizens being enabled to be able to do most of their banking functions through their mobiles in their hand. And the banking setup also has come to understand that banks need not be present everywhere, but there can always be a banking correspondent who moves around and enables the process. So more than 2 crore accounts were opened in Jan Dhan Yojana. Today, totally, there are 44 crores accounts, 44 crores of accounts, and have more than 1 lakh crore as deposit in these accounts. The JAM Trinity, in other words, has become the most powerful tool through which people have adopted fintech. The Jan Dhan, as I said, Aadhaar, which enables a certain identity, and the mobile phone through which operations are happening, the JAM Trinity, as we call it, have actually been the first stage in the fintech revolution that is taking place in this country. So you find that the JAM has been a provider of some kind of a relief to the common man, but for the fintech sector, that's actually been the basis or the foundation on which a lot of things have been built up. The National Broadband Mission, the National Broadband Mission, will now very soon cover all villages in India. It'll have high-speed internet, and this can be leveraged even through the common post office or common service centers that we provide. And today, in the budget having been announced, I can say that many of these post offices are serving as payment banks, small payment banks. They undertake a lot of banking function because the internet is available, and also banking correspondents are going in the villages, and they are able to also function as payment banks, although they can't extend credit. Investment flows because of this framework and this kind of a setup is already, system has already been created. Investment flows into the fintech sector has also seen a record high in terms of fintech funding. Fund inflows in 2021 alone saw 200% growth compared to the previous year. Large deals have also been seen from early stage fintechs to the last or the late stage rounds. So it is not as if money comes in for one and not for the others, which are progressively up the ladder, but it is across the board. Money is available for early stage and the mature stage as well. Just in 2021, $9.03 billion was raised by Indian fintechs across 410 equity funding rounds. And this is up from where? Would you believe it? It's up from $2.83 billion across 303 rounds the last year. So we've seen a considerable scaling up of funds which are being raised by the Indian fintechs. Payments also top the charts in attracting funds. Now, payment companies have received more than 4.11 billion US dollars and 46% of the year's fintech funds, which is good in terms of at least understanding that the payment banks are not left behind. 4 of the top 10 fintech investment deals in APAC in just the first half of the year 2021 have been from India. So the number that we are receiving are also significant. So as of November 30th, 2021, total fintech funding is around 27.6 billion US dollars. So this kind of a funding has also helped in better valuation of the fintech industry itself. Indian fintech industry has been valued at around 50 to 60 billion US dollars in 2020, and it is estimated to be reaching 150 billion dollars by 2025. One out of every 4 startup unicorns in India are from the fintech segment. Sometimes people do say other startups probably are not able to access that much funding, but the availability of funding has also helped fintech startups to really grow. And it's also important to note that among all the fintech startups in India, about 20 of them have reached the unicorn status. The department, the DPIIT, which deals with the startups and their recognition and their certification, have announced that they have recognized startups and their number is about 1,831, which belong to the fintech sector. 3% of the recognized startups are all in fintech. 43% of the fintech startups were recognized post the pandemics, hitting us. So the pandemic sets in, but the fintech have not stayed back. On the contrary, they've ramped up their growth. Also, India has over 6,300 fintechs, of which 28% are into investment technology, 27% into payments, 16% into lending, and 9% into banking infrastructure, and over 20% are into other fields. So they are also spread across different activities. And by fintech, we don't seem to make a single silo. There are several areas into which they are moving over. At the same time, the digital economy in India is being pegged at 85 to 90 billion dollars in the calendar year of 2020. And that which is pegged at that level for the year 20, calendar year 20, will see an exponential rise, and it shall increase to 800 billion by FY30. By 2030, they should be reaching 800 billion in the backdrop of increased internet penetration, rising incomes, and also the young Indian population. Government has made it easier in terms of smooth and easy access to the stock markets because of technology such as eKYC and also Aadhaar e-signing up have all helped the retail investors to come into the market. The total number of retail investor accounts has almost doubled from about 45 million as of March 2016. It has gone to 88.2 million by March 31st, 2021. So on every count, you're seeing the digital revolution enabling faster participation in every sector, particularly on the financial side. As per a McKinsey report, 10% increase in internet penetration results in an increase of 3.9% in GDP per capita. That's a very big number, very significant number, and the importance, therefore, of internet penetration is clearly highlighted and indicated. In the current budget, we have decided to set up 75 digital banking units. They may function from one place, but they may serve any number of districts, but we are also targeting 75 districts to be covered. And I guess the DBU, the digital banking units, will promote better accessibility of banking services, affordability, convenience, and also more control over their own finances for the customers by providing a one-stop digital banking account or digital banking center. I'll very quickly refer to the digital payments. Rapid growth has been seen in the digital payments. 23 crore transactions per day are happening, and that it is driven by the unique and secure interoperable unified payments interface, the UPI system. 23 crore transactions per day. UPI, the Unified Payment Interface, has crossed 4.5 billion transactions in February, entailing transfers of more than 8.2 trillion rupees in value. So 4 billion transactions, 4.5 billion transactions in February, but the value of those transactions is 8.2 trillion rupees. It's also interesting that the mobile-based UPI payments and the biometric-enabled Aadhaar, enabled Aadhaar, and also the payment systems which have been linked to the biometric payment indicators have also had issuance of debit cards to about 200 million rural households, meaning account holders. 200 million debit cards have been issued. With now the UPI going global and linkages with other real-time payments systems, instant low-cost payments across countries is just a matter of time. We already have in Singapore and also in UAE are RuPay cards becoming popular, and also this transfer of remittances are being speeded up. So there are benefits for the fintech getting deeper and getting into greater avenues for meeting the aspirations of Indians. India is again one of the first few countries which has announced a central bank digital currency, meaning the central bank to issue a digital currency. In 2021, a BIS survey of the central banks found that 86% were actively researching the potential for CBDC, which is the central bank driven digital currency. 60% were experimenting with technology and 14% were deploying pilot projects, which is, I think, shows that the mental readiness to accept, if at all, the central bank comes up with some kind of a digital currency. In addition, the CBDCs have some clear advantages over other digital payment systems. Payments using the CBDC are final and thus reduce settlement risks in the financial system. Imagine a UPI system where CBDC is transacted instead of bank balances. As if cash is handed over, the need for interbank settlement itself then disappears. The RBI is currently looking at the benefits that it can give and the associated risks which are associated with the CBDC itself, its various designs and the forms, and also the various use cases and appropriate technology platforms are all being looked into by the RBI. I'm glad to say that our MSMEs have adopted fintech solutions, whether it is for credit or for payments or even for accounting and tax filing. Government has recently launched the Open Credit Enabled Framework and Account Aggregator Framework, through which I think this whole process will be made easy and also expedited. So before concluding, I'd like to say that a summary of all the recent government initiatives and regulatory initiatives in the fintech area, which will serve as the foundation for India as the next fintech investment destination, which is what you're talking about today. The UPI's 123 Pay, a recently announced measure. Recently, the RBI announced it. UPI. This is a UPI service for feature phones. And this service will allow 40 crore feature phone users across India to access payment services. RBI's new Fintech division, that's another one of those, let's say, foundation stone which will augur in Fintech revolution in India. Again, recently set up by the RBI, an internal Fintech department to focus to the area and innovation in the Fintech sector, and we'll also look at regulations concerning the sector as well. So the regulator, the financial regulator, RBI has already institutionalized the process of regulating fintechs. BharatNet project. This aims to connect all the 250,000 gram panchayats by a high-speed optical fiber network. With 3.40 lakh kilometers of optical fibers already laid, BharatNet has reached 1.29 lakh gram panchayats already. So earlier I mentioned how high-speed internet facility itself can revolutionize financial inclusion. The GIFT City, or the IFSC, the International Financial Services Center in Gujarat, is a world-class fintech hub at the IFSC in Gandhinagar, and it will further strengthen India's vision to make India a global fintech hub. The other 2 points which I'd like to draw your attention to enabling this fintech revolution in India are the KYC, which is the development of and also the rollout of authentication solutions, including video-based consumer identification process, digital KYC, digitally signed documents, and setting up of a central KYC database for all the regulated entities to use it. And lastly, e-rupee, a voucher-based prepaid contactless cashless digital payment solution provided directly to beneficiaries via a QR code or SMS. So it is very much dependent on the person and also the purpose for which he would want to use it. Transparent and also leak-proof e-voucher to extend the possibilities of direct benefit transfer as a program and societal transformation through digital technology, and this can happen dramatically. So in other words, everything which we think is critical for India to become the next financial or fintech destination is being spiritedly being put forward and launched by the government. It will be the bright minds from IITs who will have to give flesh and blood life to this whole framework which government is establishing. So the framework is all there. It's for all of us to use it and benefit India to become the best of fintech destinations. Thank you very much.
Thank you, ma'am. Thanks a lot for taking us through all the initiatives that government is doing. And we are incredibly thankful that government is not only acting as a supporting partner, but government actually in fintech sector has acted as a true innovator and entrepreneur by themselves by launching multiple initiatives and make our country on forefront of digital innovation in fintech sector. Thank you so much.